welcome back to the Dapper Dragons Trading Academy. In today's video we'll be talking about the order block. So what is an order block? We're going to basically be focusing on the bullish order block in this section. Obviously the reverse will be true for a bearish order block, but just to save time I'm focusing on the bullish order block in this one. So the last down close candle or series of consecutive down close candles before an impulse expansion move higher, those series of down close consecutive candles is what makes the bullish order block. It has to be at a swing low which is at a support level. This support level can be support and resistance, it can be fair value gaps, it can be breakers, any of the PD arrays that we're going to mention in this series. So IPTA will refer back to these levels to mitigate and or add positions. It's the whole market efficiency paradigm of buying and selling and how the algorithms move. So higher probability order blocks are accompanied with a fair value gap beside it. So on any time frame, if you have a fair value gap next to the last down close candle, will make that a higher probability bullish order block. A bullish order block is higher in probability if there is also liquidity that is resting just above it. So, as we've already mentioned, the last down close candles is what makes the order block. But there are three key levels to an order block. First level is the high of the order block. The second is the open of the order block. And the third is the mean threshold, or 50% of the body. So the easiest way is really to put this into a chart format. This level will be a support level and price is hovering above it. Price will move down into this support level and will bounce with an up close candle validating this order block. So once we break the high of this down close candle, this now becomes a valid order block and we start hunting setups. The next candle leaves a fair value gap. So the low of this candle and the high of this candle, we have this buy side imbalance, sell side inefficiency. If you recall the last video, we speak about this. We are waiting to see what price does. This fair value gap with this down close candle now qualifies this as a high probability order block after we have ran into support and bounced away from it. We wait to see what price does. Price makes a swing low over here above the fair value gap and above the high probability order block. This also makes this order block higher in probability with liquidity resting above it. This liquidity has been taken. We've moved into this fair value gap and touched the high of this order block. Now the high to the open of the order block is usually the most sensitive part when we have a fair value gap next to it. Now we have a buy side liquidity pool above these relative equal highs. Price will move and purge this area. Notice what else we have at this area. We have this last up close candle with a fair value gap. This is a higher probability bearish order block. This area is at resistance and the mean threshold level is respected. We now have an area of sell side liquidity resting above the open of this order block. Price trades down, purging the liquidity and digging deeper into the order block. Notice the bodies of the candles respect the high of the order block. Notice that the mean threshold has not been traded to. The mean threshold is the line in the sand. The best order blocks will not see the mean threshold violated. Consequently, price moves higher and fills in this imbalance. I hope you found that insightful and have a better understanding of what higher probability order blocks look like. Please follow us on our socials if you haven't already, and I'll catch you guys again in the next video.